Hi everybody, welcome to tradingthemarkets.com, the trade alert service using the Wyckoff Volume Spread Analysis Smart Center Pro technology. And I'm delighted to be joined here for this market briefing session, which we will post this one on YouTube, filmed on the 15th of March 2019. It's a Friday and it's at 12:49 p.m. here in London. Philip, welcome to this broadcast. How are you doing?
Thank you very much. Doing very well. Thanks, Gavin.
So last week, and in fact the week before, we've both been looking at the stock Apple. In fact, in one of the alerts that we did a few weeks ago here in this new service where we've started to do stock alerts, we discussed Apple hitting the 182 level and then moving up from there. And obviously the key and the clue to all of this was on the charts. Now, we now do as part of our service, which is actually started on Monday of last week, our stock scanning service. And when you click on the stock scanning service, you'll see it gives you the strongest stocks in the index and the weakest stocks in the index. And you can see at the moment, we're not covering the bourse at the moment or the NYSE at the moment, but we will add those. But we are doing the ASX, the FTSE, the NASDAQ, the S&P and the Dow Jones. Now, very interesting, Philip, this Apple stock has done exactly what we thought it would do. So let me give you the screen and perhaps you could give us your analysis as we move forward. Looking at this particular instrument and why we think this could actually have quite a nice bull move moving forward. Philip, welcome to tradingthemarkets.com and over to you.
Thank you. Can you see the screen okay?
I can indeed, Philip.
Lovely. Good. Well, Apple back in December or October, November time, I should say, we started to see a top forming here. The market came down with the rest of the US stocks until we got down to, notice this bar here with the very high volume. That's the first bar here after the decline where we start to see really high volumes come in on the chart. It's on a down bar, fairly wide spread on that bar, closing near the low of the bar. So let's just follow that along, because then we get another down bar. This time the volume is a lot lower, so it's telling us there's less supply. The market starts to push up. It's not ready to go yet. As it pushes up, we then gap down. This is on the 3rd of January. Now, this bar is an interesting one because what we've done here is we've gapped down. We've got high volume coming in again, but you notice the spread or the range on that bar is somewhat narrower than these bars here. Close on the low, but there's, again, very high volume. Now, what that bar has done by pushing down into new low ground, in other words, lower than the lows of these bars, is it's removed the stops where people have gone long here in the hope of going up. And that has actually made the market stronger, having removed those stops. And since then, it's pushed up strongly. Now, I've drawn a line across the top of this bar here on the 20th of December, which is the first bar where we started to see the accumulation or the buying by the professionals coming in. And I marked the top of that bar at 162.11. Now, it will require effort to push up through there. What do we get here? We get an increase in volume, effort, it's exactly what we want to see, and that bar pushing up, closing on the highs, right through that line of resistance. It's absolutely perfect, perfect VSA setup. And then we pushed up, seen a little bit of supply, it's pulled the market back, and here is where you get your testing or your no supply coming in. And you see, in fact, if I put less bars up, you put 100 bars up. This makes this a little clearer. It's this one here. And look how low the volume is as the market is marked back down here after this little bit of weakness. But remember, you've got this strength in the background now, all of the strength here. You've got the effort here to push up through the line, this green line, which is really absorption of the supply there at the top of that bar. And then you've got your test. And they actually came back down and tested it again here. We've got a basic test coming in, again, pretty low volume there, and the market started to respond. If this continues up, and we don't see any weakness coming in here, the next area I'd be looking for would be around about the 200 level as a potential target. That's provided you don't see any weakness coming in here as these bars push up. So Gavin, back to you.
Thank you, Philip. So what we've seen here, if you look at the YouTube video that we did at www.youtube.com/trade just over 10 days ago now, when Apple was trading down at the 179, 178 level, we absolutely observed these tests, and they're very, very important after you've got this very high volume, which is in the background, which if you could point that out, Philip, again, just for the audience, where the big volume bars are in the background there, this is buying, because the two rules we must always remember: when strength appears in any instrument, it happens as it's marked down for buying, because you've got to buy at lower prices to make a profit. So here now we can see we've actually retraced almost 50% up to that 180 level. And now the 182 is a significant area. And if we see any more testing of 180, 182, then we can expect higher prices in this instrument. And it is trending higher at the moment. So the VSA analysis was spot on, not only several weeks ago when we sent this alert out in our Trading the Market service, but even today, as we look at it, it's already moved from last week's alert up quite significantly. So a very nice opportunity for those of you that I know who are members of our service, tradingthemarkets.com, who took the opportunity to buy that. We will be closing the Trading the Market service over the next 48 hours as we're nearly full for our subscription. So if you do want to join us, there is still some subscriptions left, and then we will close it on Sunday evening. And then there'll be a waiting list thereafter. So, Philip, I'm looking forward to seeing you in the webinar tomorrow, which we're doing on the 16th of March. We're going to talk about your third book, but most importantly, we're going to analyse a couple of stocks that you've picked up on, which have got some very interesting accumulation going on. Do you want to just touch a little bit? Don't say the name of the stocks, but what are you going to be looking at tomorrow as we do this webinar?
Well, I'm going to be looking at a UK stock, which I've just picked up, which has been under accumulation. We're really just waiting for final confirmation at the moment. I shall be having a look at, I usually spend Saturday mornings looking through and doing some analysis of the market anyway. So see what else I pick up on Saturday morning.
Great. Look forward to seeing you tomorrow, Philip. And so for those of you that are viewing this video, the website with all this information is here. It's at www.tradingthemarkets.com. We now have our new Squawk Box service, which we've been testing all week, and it goes live on Monday. And this Squawk Box means that the team of traders, both here and in the other offices, are able to alert you to when a major VSA indicator has appeared. And we're monitoring at the moment Forex, futures in the US, Australia, and the UK. And we're also monitoring, of course, the stocks intraday that we've picked out in our scans. So you can find out more by going to the front page of tradingthemarkets.com. If you click on the video here on the front page, it gives you a complete overview of the new service. And we look forward to welcoming you to our tradingthemarkets.com webinar that we're doing tomorrow with Philip. God bless, take care. Hope this helps you, Philip. Thank you for your time, and we wish you well. Take care and good trading and constant profits. Bye-bye.